We see a lot of growth on the natural gas side. And if you look at companies with natural gas infrastructure, they had billions of dollars in projects that they're currently pursuing, and then another, several billion dollars of opportunities that haven't been sanctioned yet or haven't started construction, but are very likely probably to go forward in the next few years.
All right, welcome back inside our proactive newsroom. And joining me now is Stacey Morris. She is the head of energy research for VettaFi. And Stacey, it's great to see you again. How are you?
Doing well, Steve. Great to see you.
Yeah, so excited to get a little some talk on what's going on in midstream, and I know that that you cover that sector so eloquently and see it all the time. So for those not familiar, maybe you can sort of talk a bit about midstream, what that means.
Yeah, sure. We really focus on what are the North American midstream companies. And those are the companies that are operating pipelines, operating storage terminals, export terminals, processing natural gas into usable form. And so we're focused on those companies based in the US and Canada that are doing those functions. And I like to call it the shipping and handling function of the energy value chain. These companies provide services for a fee under long term contracts that often have annual inflation adjustments built into them. So, what's really unique about the midstream space is that it generates stable cash flows. You have good cash flow visibility, whereas a lot of other energy subsectors, you're really dependent on what's going on with oil or natural gas prices. This is much more fee based and stable.
Yeah. No doubt there's been a lot of talk about what's going on in the Middle East right now because that sits right in where you operate. So tell me about the implications that you're seeing of this.
Yeah, I mean, I think if you think kind of longer term, what the implications are, there's a few things I would highlight. First, I think the US and Canada are going to be preferred energy suppliers for the rest of the world. If you're an energy importer today that's suffering because you can't get the volumes that you were supposed to get from the Middle East, that may cause you to look more at opportunities in the US and Canada. So we've seen some tailwinds on the liquefied natural gas side or LNG side in the US, some projects that have moved forward in recent months. And I think there's probably still more upside to US LNG capacity over time from this, even though we already see, construction leading to a doubling of US LNG export capacity by 2031. Canada has a couple LNG projects on its west coast as well. So I think there's more tailwinds on the LNG side. And then broadly, if you look at what the futures curve has done coming into the year, oil prices for 27 and 28 were under $60 a barrel for the US benchmark. And now they're sitting closer to $75 a barrel. So that's going to be a lot more constructive for US producers. And we think we're going to see a nice uptick in production growth into 2027, given that stronger futures price.
I want to ask you a bit about AI data centers, and I'm wondering what midstream companies are they seeing growth with the sort of the explosion of these data centers, really all over the world.
Yeah, and they are. We see a lot of data centers turning to natural gas for power, given its reliability, especially compared to solar and wind. And a lot of these hyperscalers are trying to find solutions away from the grid. They don't want to burden the grid, and they don't want to wait for the interconnects that take so long with trying to get power from the grid. So a lot of these companies are working directly with midstream names to secure natural gas supplies or get that pipeline lateral built, which is just a smaller pipeline off a longer pipeline to get the natural gas to their facilities. So we see a lot of opportunities here. Enbridge, which is a large Canadian name, has talked about over 50 data center opportunities that they're currently pursuing, and that's just one name. Williams, which is a midstream name, but also an S&P 500 component, is investing just under 10 billion on projects related to data centers. Five of those projects, they're going to be actually the ones providing the power for those. So there's been a lot of opportunities in the midstream space, and we just see that kind of adding to the overall momentum that we see for North American natural gas demand.
What other areas, Stacey, are you seeing for potential growth in the midstreams?
Yeah, so I mentioned, what we're seeing on the power side. Data centers is a big part of that. You also have things like coal to gas switching, electrification, and just broadly growing electricity demand, which is positive for natural gas demand in the US. I mentioned LNG and US export capacity set to double, upside probably to that number. So we see a lot of growth on the natural gas side. And if you look at companies with natural gas infrastructure, they had billions of dollars in projects that they're currently pursuing, and then another, several billion dollars of opportunities that haven't been sanctioned yet or haven't started construction, but are very likely probably to go forward in the next few years. So really strong growth project backlogs. But then you've also now got, more tailwinds on the oil side. So coming into this year, the expectation was that US oil production was probably going to be down into 2027. And now we expect it's probably going to be up about 400,000 barrels per day year over year. So with that growth, you've now got a tailwind on the oil side as well, and just a lot of opportunities, particularly on natural gas, but now also on the oil side as well.
So it sounds like there's a lot of people looking at this particular sector right now.
That's right, and I think there's a lot of reasons to look at it now. I've mentioned the tailwinds on the oil and natural gas side, but also if you're worried about inflation, this is a space that does really well in periods of elevated inflation. It gives you real asset exposure. It also, like I mentioned, these companies have long-term contracts with annual inflation adjustments. So if you're worried about inflation, it's really timely to be looking at this space. We also see company level tailwinds. A lot of these companies are generating free cash flow, even though they have a lot of investment opportunities. So companies are growing their dividends, they're doing some buybacks. So all around, I think it's a really good time to be looking at this space, especially if you're worried that, oh, at some point Iran situation is going to resolve and oil's going to fall off a bit. This space is more about playing the volumes than the actual commodity price. And so as we see kind of these long-term structural tailwinds for natural gas demand, this is a great space to try and play that and not have that same kind of commodity price exposure.
All right. Well, it's an interesting time to be in the space for sure, Stacey. Thanks so much. Great to see you again, and we'll talk soon. All right.
Great seeing you, Steve. Take care.
All right. There's Stacey Morris. She is the head of energy research at VettaFi.